NAV is one of the most misunderstood mutual fund terms. Many investors think low NAV equals cheap fund, but that's wrong. Hi everyone, welcome to Seeds of Finance, and in this video, let's clearly understand what NAV is and what it isn't. Let's begin. NAV stands for Net Asset Value. It is the price of one unit of a mutual fund. In simple words, NAV tells you how much one unit of a mutual fund is worth on a particular day. NAV is calculated as the total assets minus the total liabilities divided by the total number of units. It is calculated once every working day after the stock market closes. If the NAV of a fund is Rs 50 and you invest Rs 5,000, you get 100 units. If NAV rises to Rs 60, your investment becomes Rs 6,000. So your return depends on NAV movement, not the NAV value itself. Many beginners think low NAV equals cheap fund and high NAV equals expensive fund. But this is a myth. NAV depends on the fund's age and not its quality. What matters is fund performance, portfolio quality, and expense ratio. If you invest before cutoff time, you get the same day NAV, and if you invest after cutoff time, you get the next day NAV. This is important for lump sum investments. NAV only tells the unit value, not how good a fund is. In the next video, we'll understand SIP, Systematic Investment Plan. Like, share and subscribe for more finance related videos. Thanks for watching.